Hello and welcome to Pro Trader Strategies Market Commentary for Monday, April the 17th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. Not a whole lot of economic data today. Aside from it being a Monday, it is a bank holiday across the pond. We have French, German, Italian, and the UK all having bank holidays today, celebrating the Easter weekend. So today they are celebrating that as well, and no economic data, and a lot of trading going to be shut down due to that. So we could expect to see lighter than normal volumes even for a Monday going forward today. Here in the United States, we did get a little bit of economic data in the form of Empire State Manufacturing, came in at 5.2, well off of the 15.2 that they were expecting there. So quite a bit of pullback there. Also, National Association of Home Builders Index, which is the NAHB Housing Market Index, came in at 68, was expected to be 70. So again, a bit of a pullback there as well. On the overall markets, we've got crude oil coming off just a little bit, 30 cents, but right there at the point of control for the most amount of volume, and I would expect to see the time volume node come up there in short step. But still up above that 50 area, I thought we were going to see it at least come into the 45s. Looks like that's off the docket for now. On to gold futures pushing higher again today. Volatility continues to rise, and that is a fear indicator. That's usually going to be the times where we see people put money into gold as a safe haven, a flight to quality, things of that nature. Despite the fact that we are seeing the equities up, we are seeing the bond up on the day, actually going to unchanged right now. Basically, it's even bid at one on the bonds. So right now, just slightly treading in positive territory. With the Dow Jones Industrial Average up nicely today, about 96 points, but it is right on that 50-day moving average. Remember, we were talking about we're going to see this 50-day moving average and the 9-day moving average likely cross over this week. We could still see that unless we see a massive rally coming out of the Dow Jones or the broader equities. But right now, really kind of struggling with that 50-day moving average as resistance. Remember, anytime we're above it, it's support. Anytime we're below it, that's going to act as resistance on the way up. NASDAQ up about 24 points, but really looking like we have a bottom here in a sense with the way that this doji is. The previous day, today's rally, really looking like we've got a bit of confirmation to move a little bit higher here in the equities. So again, with the NASDAQ up 24 points, if it were to end right here, that would look like it was being confirmation of a short-term bottom anyway. E-mini S&Ps, this chart doesn't look nearly as good as the last one with Thursday's doji here. But today's pretty much taken back all of the losses we saw on Friday or on Thursday. So up 7.5 points for the most part. The market's pushing higher as well. So the equities looking strong today. The overall broader markets are going to, anytime there's not a whole lot of volume, we're going to see some lift usually. So this rally is on short, smaller than normal volume. So keep that in mind, going forward with that. Breakdown 30-minute chart of the E-mini S&P up 7 points again, and pushing on this value area low for the time. This is the time area. 70% happens within here, and we are pushing right up against that. So, one could say it's been a little overextended to the downside. albeit this is only about a 20-day chart there. On to the things that I've done. FXE, it's got massive implied volatility, as you can see here. Haven't had a whole lot of movement within this trade, so I decided to take advantage of some of this high implied volatility and put on a strangle in here. So with FXE, I went into the May and sold the 99 puts and the 107 calls to create that strangle. Was able to collect 77 cents. Now I got a little bit further away on the upside with this 107s. Those are about a 15 delta, and then the 99s are about a 23 delta. So in a sense, I kind of skewed it. It's not evenly equal distant apart from where it was trading when we set this up, but I think that we could see a little bit of upward momentum if we just get stuck in the mud right here for the next several days. We'll see some of that volatility come out of there, and we will see this volume come out, or the implied volatility come out of it. So if we get implied volatility come out, get stuck right here, we can see that theta decay. We should be able to get out of this trade rather quickly as long as implied volatility doesn't continue to go higher. But with that 107s, you know, I'm well past this volume node here to the upside, not quite to the value area high, but I am well below the value area low on the bottom side. So I'm very happy with that. As a matter of fact, the 52-week low is 100, and I am sitting down there at around 99, so I'm a full point and a half below the 52-week low. So I'm happy with that as well. So that trade put on for a strangle this morning. And then with the deer, trying to get out of this. It was looking a little bit better earlier this morning when it traded up into the 109, but I'm looking to get out of these deer trades about 50% of my max profit. If you remember, I have on the April 108, 112 strangle. The 108s got tested on Friday and again today, Thursday and again today. Hoping to just get a little bit of movement to the upside. I can cover these trades for about 50% of my max profit. So with the gamma working in my favor at this point, because this trade has kind of been against me, hopefully if I can get it up into that close to 109 area, I'll be able to get out for 50% of my max profit on that. So keep your eyes on that one as well. That's all I got for you guys today. Friday's webinar is going to be a continuation of these earnings trades, so stay tuned for that. It's going to be a great time. We're heading into earnings season. It's going to be a good time to set those up. So go to protraderstrategies.com and sign up for that. It's going to be a 4-part series, all right? Don't miss it. Can't take that? Take it easy.